Hello,
Hello.
welcome back to Kayaplus channel. So today we are going to cover a very special topic. Uh, I think just to set some context or some background to you guys. So if you guys are not familiar with us, me and Jupan are actually high school mate from a small town in Malaysia, in Taipei. And then currently we are basically in a different country. I'm still working in Klang Valley, KL, while Jupan actually moved on to pursue his career in Singapore. So I think today is a very special one. There has been a lot of discussion, chit chat every time during Chinese New Year or every time when Japan returned to Malaysia that a bunch of the friends always make fun of him saying, hey, when you want to come back to Malaysia, you went there for, I think they are about 5 to 6 years already, right? So every single time we met him, we
Seven
make
years,
fun of,
currently 7 years.
yeah, every single time we make fun of him, it's time to come back. But the more we make fun of him, the better Singapore dollar perform. I think now it's a historical high. So it's a bit funny, uh, yet sad. I mean, because both of us are Malaysian. Indeed,
Yep.
Malaysia ringgit didn't really perform due to multiple reasons. But today it's not about the Malaysia ringgit's performance. It's more of some discussion. I mean, sincere discussion between me, myself, and so Jupan to talk about as a normal working adult, live in
Yep.
Malaysia, have a family or plan to have a family, what does it really means from a saving perspective? But ultimately, you want to
Yep.
build a family, you wanted to have some saving, you want to plan for your futures. It's all about a lot of different kind of planning. So it's kind of interesting one. Japan actually do some research since we keep on teasing him to come back. He basically, I think it's not only one time. I think you also try to come back for a lot of time. I mean, of course, there are a lot of opportunities or different things that came across. But then uh, we we plan to do something a little bit serious by putting in some of the figure that literally calculate for a Malaysian that work in Singapore, for example, to begin with, if he wanted to return, what does it mean from a figure perspective? I think maybe this one I can pass it to you, to Japan, to share some of your findings uh,
Yep.
about returning to Malaysia. Yeah.
Yeah, I think first of all, I don't think I'm the only one, I'm the only Malaysian that is currently in such a dilemma. I believe I speak to all Malaysians who are currently working in Singapore, and it's a bit hard to say it, but mathematically, kind of impossible to go back if we want to achieve certain financial goals, be it certain life achievements in life. Um, at first, of course, based on the currency itself, people would say that it's already impossible. And I can assure you, it gets more and more impossible the longer you stay in Singapore because promotion, career advancements will eventually see the possibility of going back to Malaysia with the same pay or even with a small pay cut itself. The dream or the probability will diminish if you stay longer in Singapore. But no one has ever actually, put up the math out there, the mathematics out there, how much are Malaysians going to lose for Malaysians working in Singapore and opting to go back. So I found it a very interesting topic. And I think that after being teased and laughed at for so many years, I need to have some facts and figures to, show both Malaysians working in Singapore and also Malaysians working back in Malaysia, what is the trade-off and what is the kind of sacrifice that we are going to make if we actually opt to go back to Singapore. So I think let's start out with some basics and some context first, right? We are not talking about, again, we're not talking about a Sing dollar strength. We are not talking about the Malaysian ringgit. It's just basically take home pay, medium income of a normal salaryman working in both Malaysia and Singapore. And we purposely pick, the median income uh, people category in Singapore and also Kuala Lumpur as if to give it a more apple to apple comparison. If someone were to leave Singapore and then coming back to Malaysia, but their next career path will still be in KL area because that's where the job opportunities are more compared to other places around Malaysia.
Yeah,
So I think
I think we
yeah.
purposely also do I mean a switch of the background image that
Mhm.
The Malaysia flag is actually in front of the Singapore dollar, and also the Singapore flag is in front of the Malaysia ringgit. It's just to do some sort of comparison in a way. So we did it on purpose to give you some of the figures. And of course, if you are Malaysian, you don't know much about the taxation or even the so-called CPF, which is EPF equivalent in Malaysia, how it actually look like from a figure perspective
Yep.
when you actually calculate it in details. I think Jupan, maybe you can take it on to cover some of
Yeah.
the math. Yeah.
Yeah, I think we can set the standards first, set the context first. So this is actually taken from the SG Manpower Research and Statistics Department. So this is, figures put out there by the government on what is the median gross income of a typical Singaporean or typical Singapore tax resident. So it can be anyone working in Singapore. This is the median income. So as of 2022, it's around 5,070 Sing dollars per month, right? And then we'll take someone from the Malaysia category as well. So of course, the Malaysia category is much more complicated, much more diverse. And I purposely pick the M4 category. So someone from the M40 category, but slightly at the upper rank, right? So close to around 10K Malaysian ringgit per month. So we're going to compare these two categories together and see after the mandatory contributions and taxes, where do they stand? Because these are the things that we cannot control. Because CPF contributions, EBA contribution, taxes is inherent, right? So after we take up all its portion and then we go to monthly budgeting and expenses, that one it can be controlled. Someone who save more can actually save more, and someone who splurges their account will actually find it much more harder to save. So CPF for the Singapore side, which is the equivalent of EPF, is much more complicated, but the table just summarize everything. So if you're 55 and below, you would take a portion of the salary, right? And then it will be distributed or tucked into certain accounts within CPF. So the mathematics is that you're going to have 17% contribution additional wages to your CPF. Personally, your monthly pay, 20% of it will be self-contribution. So the total percentage will be 37%. And this is much, much more higher than what Malaysian is getting for his EPF contribution. Right, so that's 55 and below. Of course, as you go older, the ratios will actually differ a bit. But since I think most of us are actually, working adults still in the prime of our years, let's just focus on the 55 and below category. And when it comes to Malaysian, out of the so-called monthly salary that we take home on the gross salary part, 11% of it will be mandatory contribution. So we take 11% out of our gross income, and then that goes to our CPF. And then your employer will also pay you a 13% contribution as well, right? So of course, that's for people who are earning less than 5,000. If you are more than that, then you get 12%. So you're around that, you're getting around 23% of your gross income is total. So it's much lesser than a Singaporean getting for a CPF. So if you move on to the next portion, which is the tax portion, here's how things get interesting. So for someone working in Singapore with a median income of around 5,000, you fall around at the third box, which is the first 40,000 and then the next 40,000. Basically, you just take your monthly pay, you minus off the 20% CPF contribution. That will be your gross income, and then that portion will be your gross taxable income. And then you multiply by 12. For simplicity's sake, there's no bonus taken into consideration. So you fall around that rank, and then the first 40,000 will be a flat rate of 550 Sing dollar, and then the balance 40,000 will be, taxed at the 7% rate. So overall, I think if you take everything into consideration, the rate is pretty low. The articles will actually spell out more information, but if not mistaken, the rate is just lesser than 5% as a effective tax rate for a Singaporean median income earner. Then coming into Malaysia, if not mistaken, if you take your 10,000 ringgit a month after you minus 11% EPF contribution, you'll fall around in the round of, if not mistaken, would be roughly around, let's make a little bit of math. So 10,000, you minus off 11%, you around 9,000. So 9,000 times 12 for 1 year, you get around in a range of
70
around
plus.
100,000, 70 plus ish. So around category E, not mistaken, E or F, right? So again, the same breakdown happens. The first portion will be taxed at a flat rate, and the second portion will be taxed at the percentage, right? So if not mistaken, the rate was much higher compared to the Singapore tax rate. So after that, if you can see the so-called aggregated comparison side by side. So gross salary of a Singapore immediate income earner after you net off the EPF, CPF contribution, and then the effective tax rate, net disposable income means income that you can, take home and spend will be around 3,900 Sing dollars. Whereas for the Malaysian, if you're taking gross monthly income of 9,700 ringgit after you net off your gross salary for EPF, and then you net off the tax, you end up with around 7,666. So in times 3, of course, the math won't make sense because the Sing dollar is actually a stronger currency. And then from here 3 or forward, then only the monthly budgeting comes to play. So let's say your net disposable income is 3,900. Living expenses around Singapore, I think to be safe, if you are not someone who splurge on lifestyle kind of things to survive in a pretty comfortable life, I think 2,000 plus budget per month is more than enough, right? You can lead a very comfortable life, right? So to assume that, and this even includes flight tickets back to Kuala Lumpur monthly, right? So after that, if you net off your conservative and reasonable monthly living expenses, you end up with savings of around 1,400, right? And then for Malaysian, I think maybe Chun Bing can reaffirm this, 5,000 ringgit a month of budget living in KL area is sufficient.
Yeah, I think you may argue that it's a little bit on the high side, but we just wanted to do a little bit of a closer comparison, like in terms of the living expenses, you wanted to live comfortably, assuming you have a house, installments, and then probably you have a car as well. When you add up, it may be 4,000 each to 5,000. Then we make easy calculations. In this sense, maybe you will spend about 5,000. It's very, very, middle to upper level of the comfortables. And then we compare it back to Singapore, because you also need to consider that 2,005 per month for Singapore probably is not that bad as well. So that's why we do a easy comparison. And then, of course, when we talk about the saving, then if you net off your living expenses is about 2,600 each. For Singapore side, the medium income working adults probably will get about 1,004 Sing dollars. Yeah.
Right. So I think once you put that into perspective, then there is a little bit kind of difference, right? So median income earner in Singapore will end up higher savings, right? Because at the end of the day, when we talk about having sufficient money to put it into investment, into savings, and then even going or planning for a vacation as well, I think that is where the currency strength comes to play. Because you can see quite clearly someone who saves in Sing dollar or have median income. No, you're comparing two similar category people in Malaysia and Singapore, and somehow the median income earner in Singapore will actually have a better quality of lifestyle, right? They can actually opt to have a better vacation, right? It can be somewhere further than Asia, right, because of the savings rate and the currency strength. Whereas for Malaysia, you actually need to earn more than M4 category. Probably you need to earn like a T20 to enjoy a median income quality life in Singapore. So this is where only the difference comes to play, right? After you net off all the living standards and etc. But of course, the big question and the general concern is that what if someone currently working in Singapore getting the median income kind of pay and then gets an opportunity to go back to Malaysia with slightly around the same pay. So does the mathematics work out from that aspect? Because it's very easy to say that, oh, okay, if I earn current salary and then going back to Malaysia, I earn the same amount. I just basically take my Singapore salary and times 3.4. The math actually works out. But let's work on that aspect and see whether it really does work out or not. So I think we also have a simulation on that. Right. So I think the moment if you are able to get a salary offer, which is basically times three times of your Singapore salary. So it's going to be T20 kind of salary package already. So per month you're going to take home around 17,000 ringgit, and then you go through the same exercise. You minus off 11% of it for your CPF or for your EPF, but due to the higher monthly pay, your tax tiering system actually goes up to as high as 15%, right? So remember the tax table, a portion of it will get taxed at a flat rate, and then the additional part of it will get taxed at the percentage. So effectively combining that amount, you're actually going to get taxed 15%. So if it actually add up two portions together, if you're taking home 17,000 ringgit a month, 27% of your salary or spending power is going into EPF and also tax already. And after you actually compare the net disposable income and the between Singapore and Malaysia, you'll notice that it actually what I'm actually having in terms of net disposable income in Singapore is actually much higher, slightly higher than what I'm getting in Malaysia. And you also need to delve into the deeper aspects is where that even though in terms of percentage wise, 27% versus 22% is not much, it's just a 5% difference. But bear in mind that 20% for Singapore side is going to your CPF, your EPF, your retirement fund. Whereas for Malaysia, I think the 11% portion is really too low. I don't think any Malaysians have the confidence to say that EPF can successfully or will confidently help them in their retirement income. That's why there's a lot other initiatives, other savings plan, other retirement fund programs to actually help you achieve, your dream retirement. But for CPF, the math is actually quite solid. You can actually bank on your CPF to actually lead a relatively comfortable retirement. So you need to really think at a bigger picture of it. Even though the percentage of your disposable income is slightly the same, but on one side, retirement is well funded and taken care of, and on the other side, if you're going back to Malaysia with the same salary package, you need to fork out more in terms of your net disposable income to beef up your retirement income. And then going back with that kind of salary, you will also need to maybe make allocations to buy houses, a residential area for you to stay. And then, of course, there's a need to actually finance and own a car as well. For all these concerns in Singapore is the least of your mind. So you can continue to rent if your salary rank is slightly below median income or you cannot actually afford it. And public transport is quite convenient to most cases and most examples. Right? So I hope actually putting out the mathematics out, it helps to really, reaffirm and let Malaysians working in Singapore prove a point that it is not so easy for us to actually just pack our bags and go back if we do actually get a very good salary offer kind of package back in Malaysia, because it goes beyond that. It's more than that, it's actually thinking of what could happen in the next 30 to 40 years when we actually, achieve our retirement age. But I don't know what from your opinion or from your side of the view, what does a Malaysian actually think of when they actually look at the so-called tax tiering systems and also the retirement planning kind of initiatives from CPF and BPF kind of perspective.
Yeah, I think this gives a very good perspective if you're not familiar with Singapore. I mean, if let's say you're the one you are watching right now, you're Malaysian. Uh, the interesting thing that after Japan worked out the max is, I just found out actually the effective tax rate for the middle income players or the middle income earner like us is actually quite low in Singapore compared back to Malaysia. And another aspect of it is if you talk about the retirement fund, you thought, I thought the whole world is the same, it's about 11%, 12%, but actually it's not. If you actually compare it with Singapore, it's about 20%, which is very important. It's almost doubled your contribution, and then of course you got compounding effect. And then when you reach the retirement age, it should be far more comfortable comparing to withdrawing it from EPF perspective if you're Malaysian. But take all this aside, we are not. It's just a discussion. It's just a way to show you the actual fact and figures. We are not here to advocate Singapore is the best, Malaysia is worse. But it's just sharing some of the reality because a lot of time, like me myself, like to live inside, not live inside the dark, but I also have the impression that it should be about the same. I mean, if you can perform in Malaysia, reach the middle income, maybe you can go to T20 or whatever not. I mean, it make no difference for you to stay here versus Singapore. It's the same thing. You work hard, equally hardworking, equally smart, equally able to speak multiple language. I mean, Malaysia, Singapore. Maybe you can be proudly say, as a Malaysian, you can speak more than Singaporean, for example. But then they are the actual fact of it that you should look into it. What is the benefit if you go abroad? But of course, there are price you need to pay. It's not your home country. It may be very far away from your parents. It may be take away some sort of the freedom. You cannot own a car that can travel anywhere. So these are the price to pay. But figure is figures, fact is facts. I think this is why we wanted to do this sharing to bring you to the perspective. What does it really means? Especially, I believe most of us, including the one you are watching right now, we are the middle income earners. I think, like it or not, most of us are in the M40, but by large definition. But then the sad thing as a Malaysian, I would say, when we talk about M40 in Malaysia, it really behaves like the M shape. So you have a big portion of people suffering B40, like at the top, and then you get another one. You don't know all the hidden rich is at the top as well. If you talk about the total wealth distribution, not really wealth distribution, talk about the level, but the important guy that contributing back to the economy is like the middle income player. They are here. They get taxed a lot. I mean, Malaysian, but then they didn't treat it well enough. I think this is one of the perspective we should. I mean, if you take a step back and try to do a self-reflection, this is a step up. But of course, we as a Malaysian, we still hope it will progress to a better futures. But then, fact is fact, we are like the M 40% is really suffering in a way.
Yeah, they're actually taking
not saying B40 is not suffering. B40 is like the worst in Malaysia, but I'm saying the M40 is equally the same. That's why we advocate look into investment.
Yep.
Look into investing. It is important. Else, maybe you could just go Singapore and work. I mean, for example,
yeah. So I think after doing this study, I also have a kind of like a personal kind of enlightenment. So of course we say big fact is fact because how much and how safe your finances can be if you opt to work in Singapore and enjoy the structure of everything, right? Tax is lower, relatively lower than Malaysia, but the big portion of it is going to your CPF. That said, even though quality of retirement life is almost, I would say, guaranteed if you do not misuse your CPF. But the upfront freedom, as what you being mentioned, you might not even get the opportunity to own a car in your whole life in Singapore, right? Or you might not even get the opportunity to live in a condo or live in a landed house in Singapore compared to in Malaysia. So these are the so-called other aspects and quality. It's a give and take. It's no straight win-win kind of scenario. It's just giving up on certain benefits and advantage to enjoy another part of the bright side and advantage. So that's why there's always a love-hate relationship and kind of a good side and bad side of both Malaysia and Singapore. And to also put Malaysia up front in the bright side, do know that a lot of Singaporeans, when they reach retirement age, they also opt to retire in Malaysia, in either KL, Penang, or JP, because having a quality retirement life in Singapore requires a much higher cost. And with the earnings and the compounded returns that they have achieved along their life, they are happily taking back amount of savings and going to Malaysia to live like a king. So it's not the end of the world. It's just at the end of the day, delaying all that kind of happiness, gratifications for being a Singaporean, because things is so much more expensive over here. And then enjoying it when you actually reach retirement age by 50 or 50 and above, and going to Malaysia to lead your dream retirement life. So I think that sums up what we are trying to share today. Of course, if you think that it is beneficial, it helps you, relook at your finances and your horizons 20, 30 or 40 years down the road, where you want to be, what you want to be. Hopefully this video actually help you to plan and even think things far more ahead, because this is what we have done and we have just actually created the video. And hopefully you actually benefit from it. And if you want us to talk about other certain topics, do let us know in the comment section. And we will see you in the next episode. Take care. Bye bye.